Have you ever entered a breakout just to see the price going against you, making you lose money? Well, you're definitely not alone. And my goal with today's video is to show you exactly how you can find these traps and avoid them. And you know, by learning how to find these traps, you will at the same time learn how to find real breakouts that can help you make money. But now, before we jump into the charts and take a look at how to avoid these traps, we need to, of course, first of all, learn what is a breakout in the first place. And here, in super simple terms, a breakout is when the price moves decisively above resistance or below support. So if we have, for example, a resistance level right here, a pattern you many times see before a breakout is that we're printing lower highs into support, and the actual breakout is when we see this strong momentum move above the resistance, or as I said, below the support. And when it comes to breakouts, we want to see strong volume, because if we are talking about a real level and we break that level, we want the market to react to that level, and we want many market participants to actually be in the breakout. So one way I usually think about volume is that I think about it as how many market participants are supporting or agreeing with the move. Volume is very important to learn about, and I do have a full course about volume. I will make sure to link it up in the video card, but don't watch that course yet. You can feel free to save it to a watch later playlist, but for now all you need to know is that we're looking out for strong volume. And what is very awesome about breakouts is that they can be start of new trend and big moves, and they can also be a way to make some very quick profit, because you can get in, get some explosive move, and then get out quickly. But now then, what is a false breakout? Well, this is a form of trap. This is when the price briefly breaks a key level, but it cannot stay there. So this is a scenario when we break above a key resistance, but the price immediately reverses to the downside. So it quickly returns inside the old range instead of trending, or instead of getting a follow through. So what this does is that it actually traps traders in wrong positions. So bull traps is when they are trapped in the upside, like right here. And we also have something called bear traps, and this is the opposite. This is where bears get trapped to the downside. But now let's take a look at the most important signs of a false breakout. And the first sign I'm looking out for is low volume, because as I already briefly mentioned, real breakouts are backed by heavy trading activity. Remember what I said earlier, we want many traders to support the move, or in other words, to agree that this is a real breakout. So when we see false breakouts, they will all often happen when we have weak or below average volume. Without big participation, the move often lacks the strength to continue. But this is just one sign, and in order to really spot false breakouts, we need to of course take a look at more signs. And I can already mention that always when it comes to technical analysis, it's important to always have in mind that just because we see low volume doesn't mean that it will 100% be a false breakout. That is a mindset to have in mind throughout the rest of the video, and when you learn about technical analysis in general. We want to combine as many signals as possible to get the odds on our sign. Sign 2 here, this is a pretty self-evident sign, and that is that we see a quick reversal. So the price might pop above or below a level and then snap back fast. And that is, of course, a very clear sign that this breakout might be fake. It might be a fake out. So when we see no strong follow through, it means that the breakout attempt failed. It's often called a pop and drop, a head fake, or it has many other names. The next sign here is wicks and weak candle closes. So candles that show long wicks beyond a support or resistance is a clear sign of a false breakout. And another thing that is a clear sign is that the candle closes back inside the level instead of outside. Yet another sign here is that even if the candle closes above, so let's say that we have a resistance level right here, and let's say that the price is pushing towards this level, and then we might see a candle that looks something like this. Even though the candle closes above the resistance, this might not be enough. What we prefer to see is that we want to see a strong candle close, and this is when the candle closes far above the resistance. So a strong candle close and with lots of volume, that is a very good combination. Another sign of false breakouts is that if you try to trade breakouts that goes against the trend, it's often much harder. So breakouts against the bigger trend are more likely to fail. So let's say that the overall trend here is, you know, to the downside, and then we might have, let's say that we have a range right here. So while this can be a breakout to the upside, this might be a reversal. This breakout is more likely to fail because the overall trend is towards the downside. I hope you can get this concept. And in this video, we don't really have time to talk deeply about trends, but I do have a full course on market structure that I will link in the video card, and I highly recommend to check out that course after this one. But as an example, you know, an upside break during a strong downtrend often reverses. This is what I showed you guys right here. But breakouts in the same direction as the trend have more power. Last but not least here, and this is a very important sign, that is weak momentum. So price might push through a level, but you might have a momentum indicator like the RSI or MACD that doesn't confirm the breakout. And one of my favorite ways to use momentum indicators is to look for divergence. This is when the price goes in one direction, but the momentum goes in the opposite direction. This right here is what we call a bearish divergence, indicates a reversal to the downside. So you might see, you know, a breakout. So let's say that the price goes something like this, it breaks above resistance, but maybe the momentum indicator goes something like this. So you can see lower highs on the momentum indicators, higher highs on the price. This is another clear sign that this might be a false breakout. So a breakout without momentum is often, you know, a trap ready to reverse. But right guys, so now let's jump into TradingView. I want to show you guys an example of a false breakout, and then I want to show you guys another example of a real breakout and the sort of massive difference. But right now I'm actually looking at the Nvidia stock, and I'm on a daily time frame, as you can see up here. But these principles you can use. It doesn't matter if you are a swing trader, maybe looking at the daily and 4-hour time frame, or if you are more of a day trader trading on the 5-minute, 1-minute, 50-minute time frame. These concepts works for both. But the first thing I want you guys to notice here is that Nvidia right here was at a pretty clear resistance level. Why was this a clear resistance? Well, you can see that the price, first of all, we got a touch right here. The price tried to break out once again right here. So we had two touches. We had yet another touch right here. So multiple times the bulls have been trying to push above this level. But then you can see that we finally got a candle that pushed above. This green candle right here pushed above the resistance. So this is a moment where many traders will enter thinking that this is a real breakout. But now we have to think about the sort of rules we talked about recently. And first of all, I want to open up the volume indicator in TradingView. By the way, guys, if you for some reason don't have TradingView yet, don't worry, because I do have a special link. You can use that link and you can try out TradingView Premium for free for 30 days. And if you, after the free trial, want to upgrade, you will get a $15 bonus. So if you don't have TradingView yet, make sure to use that link. But if you already have TradingView, you can just follow along here. So as for volume indicators, we do have tons of different indicators here in TradingView. In this video, I want to keep it very simple and open up the normal volume indicator. And here you can see that we already have a bit of a concerning sign, because on this breakout candle, if you go down to the volume here, you can see that the volume is at pretty much the same level as all the other candles. We are not seeing a spike of volume. So that is a first warning sign. Another warning sign about this breakout is that remember the candle close here we want to preferably see a strong candle close above, and while this candle actually closed above the resistance, preferably we want to see a candle that looks something like this. It needs to be, you know, far above the resistance, preferably. Another thing you can have in mind is what we call momentum candles. Usually what I'm looking out for is that I want this candle to be at least twice the size, but preferably maybe 3 times or even 4 times the size of the previous candles. And here once again you can see that this candle is about the same size as the candle before it, so we have many signs here that this was actually a false breakout. And if we play this scenario out, you can see that just like that, the price actually immediately reversed to the downside. And if we continue playing this, you can see that we once again tested this resistance right here and right here. This is just confirming that this is an important level, right? But if you look what happened next, you can see that here we once again broke out. But what is the difference between this candle and this candle? Well, you can first of all see that the candle close, here we have a very strong candle close. You can also see that this candle right here is a very strong momentum candle, meaning that this candle is much larger, more than 2 times the size of all of the previous candles. So that is yet another bullish sign. Also, if we look down here to the volume, you can see that right here, the volume bar is much higher than all of the previous bar. And remember from earlier in the video, that is a good sign. Yet another good sign with this breakout is that yes, the next candle was also green, but here we had also tons of volume. So this means that on this breakout we have many people in the market participating in the move. And you know, think about it as this: if a trader buys the breakout, you can think about it as that then that trader agrees that it's worth buying at that price, right? It's worth getting in at that price. So think about volume as how many traders are agreeing that this is a real move. This is a very good sign of a real breakout. And let's actually play out this scenario even more. As you can see, if we play this one out, you can see that this breakout was actually the beginning of a massive move towards the upside. Let me pause this one. You can see this move was super big towards the upside. And I once again want to just mention that this is definitely not a realistic scenario that will happen anytime, but just to demonstrate, you know, the clear difference between these two breakouts, I want to use clear examples in my videos. And if you would have gotten in on this breakout, you could have made lots of money. But right, guys, so in order to master breakout trading, it's so important to learn about a concept called price action. So if you have some time over, make sure to check out this course. If you don't have time right now, make sure to save it to a watch later playlist and go through it in your own pace.